Puppy Trades! I want to do a video analysis update on Cathie Wood and her growth stocks. We'll really stick to clean energy and software in this video. Before we get into it, I want to talk about some fun statistics. So we had the Fed meeting today. Here is the past since 1994, what happens after each Federal Reserve chairperson speaks. And Jerome Powell, very interestingly, he's actually this red line. So this black line right here shows what happens at that 2:30 p.m. presser. We see that Jerome Powell, he actually isn't a very good order. So normally after Powell speaks, we actually get a pretty substantial A, B, C correction. And of course what happens, he comes in, he clarifies, oh, I wasn't that hawkish. Oh, I wasn't that dovish. Oh, I actually am concerned about inflation. So just want to have some fun. We really need to get Bernanke back in office, but Powell, he's not a very good order. So statistically, we kind of tank after Powell speaks. Just thought some of you guys would have fun with that. The more interesting piece of statistical evidence I wanted to show, I've talked about the midterm seasonality a lot recently. What I wanted to show is the past 20 years updated December 31st of 2021. So very recent data. We see that you're kind of supposed to be bearish in late January, right? That's kind of how it works. Late January is kind of like September, where everyone gets super bearish and then we have a substantial rally. So the only difference, at least that I can see from the midterm seasonality and the seasonality just for the past 20 years is that in the past 20 years, you sell in May and then you get back in June. In the midterm seasonality, which we've talked about, you sell in May and then you actually stay away for a while. So this is the past 20 years. Statistically, everyone gets really bearish in January before we rally. So that's all fun. Let's talk about actual levels. And with Tesla, what I really want to show with Tesla is what I can see as the worst case scenario for the stock market, for growth, for really, it's Tesla, right? So if Tesla's moving one way, a lot of things are going to be moving with it. That's why we focus so much on Apple and, these large components. But the most conservative view of Tesla in the short term is that this is a wave 1 and a wave 2 from the March 2021 low. This is a wave 3 and an ABC correction in a wave 4 at the 50% retracement. So if Tesla just takes off from here and makes a new high, the expectation is that that was all a wave 3. This is a wave 4 that ended. Tesla's wave 5 target is probably going to go back to the median of that pitchfork up into the 1500 range. Okay, so that'd be very bullish for Tesla. And if I'm calling this a wave 4, I want to see Tesla above 813. So that's if Tesla just goes to the moon. They reported earnings, so we can see maybe some upgrades. Who knows? But if Tesla doesn't go up immediately, what I really want to show is what I could see as the worst case scenario from an Elliott wave perspective. Now, obviously, this isn't actually the worst case scenario, right? There can be nuclear bombs going off while I'm recording this video, and all the stocks can be at zero, okay? But what I could see is the worst case scenario from an Elliott wave perspective is this. What if Tesla goes any deeper? I will share for my true OGs, the people who have been around for a long time, what I see as the worst case scenario for Tesla, for growth, for the stock market in general, if we have more blood. If we had more blood, my expectation is that Tesla is ending a very important wave 2 correction. This is a huge wave 1. This is an ABC correction ending a very important wave 2. So where the length of wave A, place of the wave B high ends is where a wave C should end between the 61.8 and 78.6% retracement. So if Tesla had any more blood and it entered the 61.8 to 78.6% retracement zone of 813 to 696, I would be looking for this all to be a massive wave 1 and a wave 2. That means that this would be a huge opportunity if it happened. And I'll say this 50,000 times, this marginal new low is not something I'm betting on. It's actually something I'm actively betting against. But if Tesla has more downside, what I would see, this is all a massive wave 1, that's an ABC wave 2. Everyone's going to be getting off the bus right before it's ready to go. I think this would all be a massive wave 1, an ABC correction would be a wave 2. The minimum wave 3 target would be 1500. 1560 before a shallow wave 4 and a wave 5 higher. The conservative wave 4 will retest the wave 1 high. And then the length of wave 1 placed at the wave 4 low gives a wave 5 target of 1900, 2000 in the future. So that's the worst case scenario I could see. The worst case scenario I could see, if there's more blood in the market, is that this is an ABC correction. This is all a massive wave 1. Wave 2 will end between 813 and 696. Then Tesla's getting ready to fly. Okay, so that's the worst case scenario. Am I betting on that? No. A lot of people don't want people to know this, but in Elliott wave theory, you're not supposed to trade waves A, B, and C. Okay, spoiler alert, you're not supposed to trade waves A, B, and C. But anyway, what could be happening, the reason that I won't bet on this is because Tesla could have already ended this very important wave 4 correction. So if Tesla just keeps going higher, very tight if it holds above 813, let's say Tesla just flies after earnings to new highs, the expectation is that's wave 3, this is wave 4, the wave 5 target is 1550. So in my opinion, most paths lead to the mid 1500s. Some paths actually lead beyond that. So that's Tesla. Very important for NIO. NIO, obviously very important. Going to be looking at XPEV and Lee. What I can see for NIO is that this is a 1, 2, 3, 4, 5 wave 1. And I don't think that that's really even disputed in the Elliott wave community, that this is an impulsive structure that is clearly subdivided into 5 waves. Really, the debate for the past 6-7 months has been that this is an ABC correction. What I've thought for a while was that the ABC correction ended in May. And then when NIO broke below that, there was the possibility of more downside, but we were still between the 61.8 and 78.6% retracement. So when we look at XPEV, when we look at Lee, we talk about the idea that Tesla, the worst thing we could see possibly is a marginal new low before it explodes. I think we look at NIO and we say, okay, this is an ABC correction. This is what the bears have said for the past 6 or 7 months. And I'm curious to see if any of my fellow colleagues who actually predicted that this would be an ABC correction and that NIO would go into the low 20s, if they now come out and say, hey, this is that incredibly important wave 2 buying opportunity before we explode. My guess is it's gonna be another new low, another new low, another new low before we go higher. I think that this is all a huge wave 1 and an ABC correction wave 2 between the 61.8 and 78.6% fib. So there's a lot of other charts that I'll give to supplement NIO, but just with NIO, we're between the 61.8 and 78.6% retracement. We are where the length of wave A, place of wave B high, is where wave C ends. NIO is at $22. If it ends wave 2 and goes to a wave 3 high, just breaking the wave 1 high is a 300% gain. You know, triple the investment is getting to 66. And that would be the minimum wave 3 target. The more accurate wave 3 target would be 86 before a shallow wave 4 and a wave 5 higher. So obviously exponential growth is going to take time, but what I could see, especially when we look at XPEV and Lee, this is an ABC correction. The length of wave A, place of the wave B high is where wave C ends. We'll talk about other Chinese stocks, but just with Tesla, right? If Tesla's rallying into the 1500s, even if it doesn't do it right away, we probably shouldn't be betting against NIO against that during that time. So I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. The length of wave A, place of the wave B high. We're getting right there. The worst thing I could see is what we're seeing right now. Between the 61.8 and 78.6% fib, between 26 to 15, NIO ends the wave 2, goes wave 1, wave 2, wave 3 higher. So when I invest in growth stocks, I take a much smaller position size than I do in value. Now, most people, value stocks are too boring, right? They're boomer stocks, but that's really where I am putting my largest positions because they have lower betas. So I manage the risk for growth up front. I am in Chinese EV, I'm in some e-commerce stocks, and I'm just gonna hold them for a very long time. So that's NIO. Here is XPEV, here is Lee. I think XPEV shows if there really were a tight level for a stock that has high correlation with NIO, I think it would be XPEV. This is a wave 1 and an ABC wave 2. This is another wave 1 and another wave 2. So if XPEV is above 33, I expect this is a wave 1 and a wave 2. The wave 3 target is 70 before a shallow wave 4 and a wave 5 higher. Now, for a high beta stock like XPEV, 33 is a little tight. When we look at Lee in a second, we'll see that it wouldn't be the end of the world if that level did go, but I think there is a good chance that is a wave 1. This is a wave 2. The wave 3 target is 70 before a shallow wave 4 and a wave 5 higher. The moral of the story is that if XPEV is in the 70s, if XPEV is in the 80s, it's not only extremely good for NIO, it's not only extremely good for a lot of clean energy stocks, it's really good for the recent IPO sector. There's an ETF called IPO that holds a lot of Lee, it holds a lot of Lucid Motors, it holds a lot of Unity Software, holds a lot of XPEV, and we've seen a few of those names go break this exact same IPO high that they kind of all form. So that's XPEV. Here's Lee. Lee breaks below this wave 1 low. I don't think it's the end of the world. I think this is still a wave 1 and an ABC wave 2. I think this is a wave 1 and an ABC wave 2. So we're between the 50 to 61.8% fib. I believe this is an expanded flat. Now, normally I don't like to say the word expanded flat or WXY because a lot of people think that wave theory is kind of voodoo anyway. So if I start saying terms like that, but anyway, I think this is a wave 1 and an A, B, C expanded flat. All that means is that wave B marginally breaks the wave 1 high. So we're still between the 50 to 61.8% retracement. If Lee is above 20, then the 161.8% extension of wave 1 is 49. Very similar to XPEV. That means Lee is at a new all-time high. That means Lee has confirmed an IPO-based breakout. It has confirmed, in my opinion, a long-term bullish cycle for not just Chinese stocks, not just clean energy stocks, but recent IPO stocks as well. So Lee above 20, XPEV above 33. They might be nice levels for neo-bulls. Here's FSLR and Enphase Energy, another set of pretty tight levels for clean energy. I believe this is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. And yes, I believe this is a wave 1 and an ABC wave 2. We haven't seen FSLR or Enphase Energy break below the May low. I don't think that's an accident, but we are getting tight. I think this is a wave 1 and a wave 2. If FSLR turns around, the minimum expectation, the very extremely conservative wave 3 target would be 127 before a shallow wave 4 and a wave 5 higher. This whole rally is from May to November, right? So 5 or 6 months into the summer, we could see dramatically higher prices in clean energy stocks. So that's just something I'm thinking about. Right now, First Solar kind of has a pretty low risk and a high reward. If it's above 67, that's wave 1 and wave 2. The target for waves 3, 4, and 5 potentially take it to the 170s in the bigger picture. Here is Enphase Energy. Enphase Energy is getting close to this May low, very similar to FSLR. It could provide tighter levels for clean energy bulls. I think this is a wave 1 and a wave 2. This is a wave 3, 4, and 5, forming a massive wave 1. This is an ABC correction ending a wave 2. So very similar to FSLR. If Enphase Energy is above 108, I believe this is a wave 1 and a wave 2, so I want to see what happens to them. But if they turn around, the minimum expectation for Enphase Energy is that the wave 3 target is 286 before a shallow wave 4 and a wave 5 higher. So there's a lot of clear downside levels, but the upside right now is really kind of hard to define, right? Because the minimum wave 3 target in the future would be 286. We'd have a shallow wave 4 before a wave 5 higher. So that's Enphase Energy. Here is QCLN. It holds a lot. It holds a lot of Enphase Energy. It holds a lot of Tesla. And it holds a lot of NEO. It also holds a little bit of the semiconductor stock. So that's kind of one small point I'll make. I talked about AMD and NVIDIA recently, but a lot of clean energy ETFs like DRIV, Drive, and I think a lot of clean energy ETFs have overlap between the semiconductor sector and the clean energy stocks. In fact, First Solar is actually classified as a semiconductor stock, which I thought was very interesting, but this is a wave 1 and an ABC wave 2 for QCLN. So what I'm expecting is we have broken below this low, and the length of wave A placed with wave B high is where wave C is ending. So this is kind of something we can talk about with ARK and a lot of ETFs, but the IPO ETF, the ARK ETF, the ARKW ETF, they're all kind of at where the length of wave A placed with wave B high is where wave C ends. So for QCLN, it's getting a little tight, but if we're above 44, then this could be wave 1 and a massive wave 2. The minimum target in the future would be that the length of wave 1 placed at the wave 2 low. It says a minimum target for an ETF is 121 for wave 3 before a shallow wave 4 and a wave 5 higher. So this could be a great opportunity being made difficult. Right now, below 44, there'd be a little more room to the 78.6% fib. I think the length of wave A placed the wave B high would be the ideal place for a wave 2 to end. That's not too far away. And kind of like we talked about with Tesla, even if there were a little more blood, there'd be a lot more upside in the bigger picture. So I think it's going to be worth it. If we look at Workhorse, if we look at Acromoto, I mean, these are stocks that have extremely high betas. They're extremely risky, but I just wanted to show I want to talk about small caps in this video. I'll talk about IWM next. I think we could see a theme in 2022 of small cap names outperforming large caps. And one kind of thing I wanted to touch on, which I'll touch on with IWM in a second, is that when the market is rotating from a winning sector to a losing sector, it's not doing it on the days where everything's green. It's doing it on the days where everything is red, right? When there's a lot of blood in the streets, when every single ticker is red, most likely one of two things are happening. Either one, the bear market and the super top has happened, right? That's always a possibility. The other possibility, if that's not the case, is that we're seeing a massive rotation into sectors that have previously been losers. The point that I'm trying to make is that there's a good chance the past week and a half of blood in the stock market could be a massive rotation, and we're not really going to find out for sure what sectors are being rotated into until a few weeks, a few months have gone by. But I think what we're going to eventually find out is that we've been rotating into small caps, we've been rotating into clean energy, we've been rotating into growth, we've been rotating into foreign markets. If we look at Workhorse, I believe from this low, this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. Now, realistically, Workhorse is a good example of why I just manage risk up front with growth, because the stop loss can't be 1.31. But if we're above 1.31, I expect this is all a massive wave 1 and it's ending a wave 2 right now. It can turn around and go ahead to a new high for wave 3. So Workhorse is extremely risky. It has a very high beta, but one thing that I like about high beta stocks is that they give exposure to a sector for a smaller amount of capital. So I can invest less money into Workhorse and Akamoto and get a very high amount of exposure to clean energy stocks. So that's kind of one way that I view kind of the higher beta names that most people wouldn't touch. If we look at Akamoto right now, it's almost identical to what we see with Workhorse, where this could be an extremely important wave 2 low. And I think very similar to Workhorse, it's a pretty clear 1, 2, 3, 4, 5 waves impulse. Now the dramatic, very scary wave 2, and very similar to Workhorse, where the really only practical way to manage risk, at least for me, is with smaller position sizes. But if we're above 4.68, this, very similar to Workhorse, could be a small cap ESG name that provides a lot of exposure to clean energy in the future. If this ends wave 2, wave 3 takes it to 36. Kind of similar to Workhorse going above 42. That's an insane return, but that's just the minimum expectation if this really is a wave 3 that begins. So much higher risk leads to much higher reward. That's why I take much smaller position sizes with growth. That's why I give growth their own video. But if we look at IWM, one thing I really want to talk about is the idea that we could be rotating right now into a few sectors. Foreign markets could be one, growth could be one, but I think small caps in general could be one. If we look at IWM, this is a very bullish view. I'll show a more conservative view. The most bullish view of IWM is that this is a 1, 2, 3, 4, 5 massive wave 1 and an A, B, C correction ending a wave 2 between the 38 and 50% retracement. So if this is a wave 2, then honestly 175 is a little tight. Even 188 would be extremely tight. But what I think will end up happening is that this is an ABC correction. The length of wave A placed at the wave B high is where a wave C can reverse and we'll make a new high. Now, if this is all a wave 1 and this is a wave 2, then the minimum wave 3 target would be as high as the 300. So we don't really even need to talk about that until we see IWM has reversed and gone above this wave 1 high. But I'll even talk about a more conservative view. A more conservative view would be that this is a wave 1 and a wave 2. This is a wave 3 that ended very recently in November, and this is the wave 4. So the minimum kind of silly wave 5 target would be the length of wave 1 placed at the wave 4 low. That would say that we're going to make a marginal new high to the 250s. I don't really think that's accurate. I think realistically wave 5 will be the length of wave 3 placed at the wave 4 low. And even in a more conservative view, we can see IWM head into the 300. Now, it's pretty crazy to think about IWM going into the 300s, but if that did happen, then we would see incredible performance, most likely from a lot of small cap names in the growth and value sector. And the big point is that we could be rotating right now, these past few weeks, all this blood could be money flowing out of some leaders into some losers. And we're not going to quite be knowing exactly what those sectors are, but I think come February, maybe March and April, it'll be very clear that a lot of the names that we were rotating into were small cap names in the growth, the value, and the foreign markets. So that's IWM. If we're above 188, that'd be extremely tight. 175 would be a little wider. I think in a lot of views, we're going to look for an ABC correction to end and a new high at the very minimum to be made. But more realistically, if we do make a new high, we head past 250, IWM is probably heading to the 300s. We're probably going to see a lot of clean energy names in the small cap kind of region. A lot of growth names in general do very well during that time. If we look at FXI, these are Chinese large caps. I wanted to supplement this with a lot of the Chinese names. I've talked about before how if you look at the chart of emerging markets for the past decade and you look at the chart of FXI for the past decade, they look identical. If I move the charts like this, you wouldn't be able to tell the difference between EEM and FXI, except that EEM has already broken above this exact same October 2007 high. I believe that emerging markets are acting as a leading indicator that in the future we will see FXI go break this all-time high. What that could mean is that this is a wave one and a wave two. This is another wave one and another wave two. So for Chinese stocks in general, I'm interested to see if we hold above 33. If we hold above 33, then this could be a wave one from this low, and this is a wave two. The wave three target in the future would be 67 before a shallow wave four and a wave five higher. So this kind of supports the idea that a huge opportunity could be around the corner, if not here, for Chinese stocks. And a lot of people, they're really worried that the NASDAQ and the S&P could do what they did in the 2000s, enter a period of basically 0% returns for multiple years. But I think that one thing that's very important to do is go look at what happened in the 2000s. While yes, the NASDAQ didn't recover the 2001 high until the decade ended, the Chinese stocks in FXI, the stocks in emerging markets, the stocks in XLE, the energy sector, a lot of the gold miners, they dramatically went above the 2001 high before the decade ended. So we could see if, we do have sideways action in the future, that people will need to own the stocks in Chinese markets. They'll need to own stocks in the growth sector. They'll need to own stocks in the even precious metal mining sector. A lot of stocks that we call weak losers right now, they could be the only things giving money in the future. That's kind of a long-term idea. If we're above 33, I'm looking for this to be a wave one and a wave two. FXI heads to 67 before a shallow wave four and a wave five higher. We'll stick with that Chinese stock theme. Here is Netease. I think this is an extremely important chart. If we look at Netease right now, the view is that this is a wave one and a wave two, very similar down to the date as Alibaba. I think a huge piece of evidence for Chinese stock bulls is that this is a pretty clear 1, 2, 3, 4, 5 waves impulse. Now this likely is an ABC correction between the 50 to 61.8% fib. So 77 to 74 would be a little tight, but if we're above that, wave two has already ended for Netease. We're gonna go the length of wave one, place of the wave two low. What I'm looking for in the future, hopefully not too distant future, is that Netease will be above 134 before the rest of the Chinese internet stocks, and it will be a very leading indicator, an early leading indicator that we did see a correction in 2021. Now we are resuming the rally. And what we could see in the future is that Netease will hold above 77 to 74, and it will be above this high of 134 before a lot of other Chinese stocks follow the leader. So that's Netease. If it goes to a new high, the minimum wave three target would be 175 before a shallow wave four and a wave five higher. So very cool chart, a lot of evidence. So with Alibaba near this kind of 78.6% fib, they're not making Alibaba easy. If we look at Netease probably gives the best levels for Chinese internet stocks, probably FXI holding above 33 as well, but I'm in Alibaba. I'm just going to hold it for the long term. Exponential growth takes time, and I think this really could be a monster stock. And I think what a lot of people fail to do is they think they found a monster stock, so they think, oh, it's going to be easy, right? It's a monster, so it's just going to go up in a straight line. No, it's the opposite. They make the monsters extremely difficult. They make Amazon extremely difficult. They make Netflix and Apple and Bitcoin and Nvidia extremely difficult. And that's because they are the biggest winners. The institutions want all that supply to control for a long time. And I think we look at Alibaba, they're getting all that supply from retail. We have a few other charts in the growth sector that support the idea that e-commerce could do very well. I think there's a lot of evidence that Chinese stocks could do really well. So for Alibaba, I'm going to hold it, but I think that the best levels come from FXI holding above 33, Netease holding above 74 to 77, and then it really is, the downside risk can be defined. The upside risk can't, because the minimum almost silly wave three target in the future, if this is a wave three that begins, is the 370s before a shallow wave four and a wave five higher. Let's talk about Baidu. Baidu's a little interesting. It's in the SOCL ETF with Twitter. I'll talk about Twitter in a second. It's been on the bar chart straddle and strangle screener recently. That's a screener that I talk about a lot. Remember, that's free options, long strangle, long straddle. This screener, it's not magic, but it's proven to find stocks that are going to have a massive move that institutions are buying a lot of options on. So we've seen JD, we've seen Baidu on the screener recently. And given that we're at the 78.6% fib, I don't think the institutions are playing a move to the downside. I think that they're hedging for a massive move, and I think that they're getting ready for this to be a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. We are at the 78.6% fib. I think the small degree wave 2 low of 114 is a nice level, but I think this is a wave 1 and a wave 2. What we could see in the future, I know this kind of sounds wild right now. This is a wave 1, this is a wave 2. The minimum wave 3 target would take Baidu above 354. This is interestingly, I think this might even be a play on clean energy stocks. This company kind of does everything. Very, very crazy fundamentals with this stock, but it's in a lot of sectors. It's a clean energy stock. It's a Chinese internet stock. It's a lot of things. I think this could be a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. It's in the same ETFs with Netease and Twitter SOCL. I think we could see that 114 isn't broken and that Baidu, like Alibaba, will follow Netease in the future. Will follow FXI holding above 33 and go substantially higher. Just getting above 354 would be a huge gain, but that'd be the minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. So Baidu, Alibaba, Netease, right? It's kind of the same chart over and over. If we look at Twitter right now, I think that Twitter is a lot of evidence for growth. I really do. Let's just talk about the kind of short-term view. The short-term view for Twitter is that this is a 1, 2, 3, 4, 5 wave 1. This is an ABC correction wave 2. We're at the 78.6% fib. So if Twitter turns around and goes higher, it's going to do that with the entire growth sector. I think that's what a lot of people don't understand. They're not just bearish they're not just bearish Nano-Dimension, right? They're not just bearish Beyond Meat. They're bearish the entire growth sector. They're bearish Twitter. They're bearish Pinterest. They're bearish Shopify. They're bearish a lot of stocks that if you really ask them, hey, are you actually bearish Twitter? Do you actually think Twitter is going to go to 0 right here and it's a good short? They wouldn't say yes. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 78.6% fib. So this would be pretty tight, would be 28. That'd be a very tight stop. And we could see the length of wave 1 place at the wave 2 low, take Twitter substantially higher into the 90s for a wave 3 before a shallow wave 4 and a wave 5 higher. I want to talk about kind of the bigger degree picture. For Twitter, if we kind of zoom in, I think Twitter has a lot of kind of interesting information from before what happened in March of 2020. So what we just looked at was what happened after March of 2020. I believe a wave 1 and a wave 2 formed from that low. But if we look at what happened before March of 2020, I think Twitter formed a 1, 2, 3, 4, 5 wave 1 and an A, B, C correction wave 2. And I think this is a pretty clear impulsive structure. So this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. Then the minimum kind of expectation is that Twitter will never in the future break below 20. Okay, you're not supposed to use the word never in trading, but from an Elliott wave perspective, if this is a wave 1 and a wave 2, Twitter can't break below 20, or at least it shouldn't. And then that means that this is another wave 1 and another wave 2. We'll see buyers appear before wave 3 of wave 3. And we look at kind of the big bird view of Twitter. It's like, wait a minute, this could be a massive base. This is a huge, 10 years of accumulation potentially before a massive base breakout. That's all kind of in the bigger picture. In the short term, I think this is a wave 1 and a wave 2, ending at the 78.6% fib. In the kind of medium term, though, I think there's a lot of evidence from Twitter for the entire growth sector that this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 that ended in March of 2020. So if that's a wave 1 and a wave 2, that means this is another wave 1 and another wave 2. The minimum wave 3 target would be 92 before a shallow wave 4 and a wave 5 higher. So Twitter kind of shows, hey, wait a minute, you might be too bearish all the growth stocks, because I don't think a lot of people are actually betting against Twitter right now. But if they're not betting against Twitter, then they're not betting against a lot of social media stocks, a lot of growth stocks, a lot of stocks that we call right now weak losers that we could be rotating into. Here is the ARK ETF. ARK just kind of shows this is a wave 1 and an ABC wave 2. So yes, I was looking for ARK to not break below the May low, But this is still an ABC correction. The length of wave A placed with wave B high looks like it's where wave C is ending between the 61.8 to 78.6% fib. Now, 60 is getting a little tight. The 78.6% fib lines up with this wave 1 high of about 60. So 60 is a great round number for bulls to stay above just for ARK. And I think this is an extremely important chart. If bulls are really looking to define risk and growth to the downside in the short term. But if we look right here, this is an ABC correction. And I think what's very interesting, a lot of Elliott wave theorists actually predicted this better than I did. They predicted that this was an ABC correction. So I'm very curious to see, are they going to come out now and say, yeah, that was that ABC correction I predicted. This is where wave 2 ends. Load the boat. Wave 3 of wave 3 is about to begin. I'm not sure they're going to say that, but if we're above 60, then they were right. This is an ABC correction. The length of wave A placed with wave B high is where a wave C ended. At the 78.6% fib, they called the correction better than me. I'm curious to see if they'll call the impulse. The length of wave 1 placed with the wave 2 low says ARK can go to basically 196. Let's round it up to 200 before a shallow wave 4 and a wave 5 higher. I mean, that's an ETF full of growth stocks, full of stocks like ROKU and Tesla. And the entire ETF could be way higher than the current levels for a minimum wave 3 target. Just breaking this wave 1 high is over a 100% gain. So if we're above 60, the length of wave 1 placed with the wave 2 low will say that, believe it or not, the institutions were buying this entire time. And I know that sounds crazy. That sounds impossible to believe that all these institutions were buying this entire time. What I believe was happening was this was a base. They're getting all this supply very quietly, and now every retail trader has been margined out of ARK, right? If you bought ARK, if you bought any growth stocks on margin, which I never do, you're out. You've given your shares to institutions. And I think what's going to happen is we're at the 78.6% fib. We're going to see the wave 1 high and the 78.6% fib of 60 hold, at least on a closing basis. We're going to go the length of wave 1, place this wave 2 low. But all that matters in the short term is that we'll go turn around, break this wave 1 high, and do significantly better. I think for a lot of growth stocks, there's 2 stocks that won't be covered in this particular video that I talk about very often and will continue to talk about, Disney and DraftKings, kind of in the reopening sector. It's like, wait a minute, we're betting against a lot of names. I think that a lot of people don't realize if you're betting against growth, you're not just betting against the sexy names like Nano-Dimension, you're betting against Disney, you're betting against Twitter, you're betting against Netflix and Salesforce. I think a lot of people, they're not too bearish, those stocks. But anyway, that's ARK above 60, significant upside. ARKW, the internet ETF, is a very pretty chart. This is a wave 1 and an ABC wave 2. This is where the length of wave A placed the wave B high. It's where wave C ended. So if I go on FinTwit, I better go see all those great Elliott wave theorists who predicted this better than me, who said this was an ABC correction where the length of wave A placed the wave B high would take a wave C lower. I'm very curious to see, did the people who predicted this ABC correction, are they going to come out and say, yeah, I predicted this ABC correction perfectly. That's wave 1 and wave 2. Load the boat. I'm not sure they're going to say that. If we're above the 78.6% fib of 72, which lines up with this wave 1 high of 72, it's kind of like ARK with 60. We can see wave 1, ABC wave 2. We turn around right here. I mean, 234, we're talking about an ETF full of internet stocks in the growth sector, the ETF tripling, right? So what would the top holdings be doing? Most likely a lot further than that. Here at Square Cash, I think one good thing about Square Cash on the larger degree is that it looks pretty clear that this is a wave 1 and a wave 2 that forms in the March 2020 crash. So I think this is very similar to Twitter, where it's not just what happened since the March 2020 crash, it's also what happened before the March 2020 crash. That this, kind of like Twitter, is a wave 1 and an ABC wave 2. That means this most likely is another wave 1 and another wave 2. If we zoom in on Square, well, I think we could see this is a wave 1 and a wave 2. We are getting close to the 78.6% fib, which is 87. That's a little further than when I originally was talking about Square. I was talking about Square at this level. So wave theorists are allowed to have stops, even though I personally use position sizing as risk management for growth. When we broke below 192, Square and PayPal, they went from being like a little swing trade to, wait a minute, this could be MasterCard or Amazon in 2008, right? That's a big if. That's a huge if. But what happens from an Elliott wave perspective if this is an ABC correction and Square turns around between the 61.8 and 78.6% fib, then yeah, that was wave 1 and wave 2. The minimum expectation from any Elliott wave perspective, if we're ever above the wave 1 high, is that Square is going to 358. And in my view, that'd be a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. So it's kind of the theme is that we can define risk. Okay, 87, that's a good level to stay above, right? That's the risk is clear. The reward right now isn't really clear because 358, yeah, I think that's going to be hit, but that's a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. And I think we're going to find out why the institutions were accumulating Square so aggressively while it was a weak loser before they kicked everyone out. I think we're still going to see the institutions are kicking everyone out. They're kicking everyone out just like they did in March of 2020 before Square exploded. So that's just something I'm thinking about. Here is PayPal. PayPal, very similar idea. If we look at ARKF, it's a very similar concept. Wave 1, wave 2, another wave 1, and another ABC wave 2. So between the 61.8 and 78.6% fib, PayPal holding it above 130. Very wide would be 124, but the 78.6% fib is a nice level to be above. I think just like Square, that could be wave 1, that could be wave 2. So PayPal broke below this low of 223, and it went from a swing to, for me, it became a long-term investment. So some people believe that swing trades can't become long-term investments. To me, I am usually looking at swing trades that if they failed, I would really want them to be long-term investments. And I think that's what happened to Square Cash and PayPal, where when we broke below these lows, kind of similar to ROKU, they stopped out the swing idea in the short term, but then they became much bigger opportunities. This massive correction could be similar to what a lot of the e-commerce sector, like Amazon, like MasterCard did in 2008. I know that's a bold comparison, but if we're above 130, if we're above 124, that's the risk. And the reward, that's kind of where the imagination comes in. Because very similar to Square, PayPal going to 380, while I think it gets hit, I think that's a minimum wave 3 target. We have a shallow wave 4 before a wave 5 higher. So ROKU is a very similar idea. ROKU, Enphase Energy, there's a few names in this video that I really get clowned for a lot. What's interesting is that I predicted a lot of these stocks, even with these big sell-offs, from lower levels. I've been around for a long time. I called ROKU the stock of the summer in this level, and we had a clear impulse. So I don't bring that up to brag. I bring that up because if an Elliott wave theorist is able to predict a massive impulse, then they're probably right about the corrective structure, or at least I give Elliott wave theorists the benefit of the doubt if they predict a correction or an impulse before it happens, right? So if someone predicts a ABC correction better than I did, then I'm going to really listen to what they have to say. And I think that right now we've seen a lot of these growth stocks where I kind of came out and predicted that they were going to explode in the summer of 2020. And if that means that these were impulsive structures, which I believe they were, I think for ROKU, this is clearly an impulsive structure, right? That's kind of one of the hardest things to debate is that this is a wave 1 and a wave 2. This is a wave 3 that went way past the 161.8% extension. We had a wave 4. And then wave 5 was at least the length of wave 1 placed with wave 4 low. That means that this is a clear textbook 1, 2, 3, 4, 5 waves impulse. So really in any count, I believe this is a wave 1 or a wave A. This is a wave 2 or a wave B. What should happen is that we're going to see ROKU reverse before 125. Now, if 125 goes, then there's not really a level to trade against. So that's kind of the flaw with ROKU. I think it's a huge holding of the ARKW ETF. So ARKW could be a supplemental chart. ROKU is another example of a stock that I take smaller positions in and manage risk up front. I know that for the best opportunities, they're going to make me feel like an idiot, at least for a little bit. But I think 1, 2, 3, 4, 5, wave 1, ABC, wave 2. It's kind of the cruel irony of the stock market where a lot of people, a lot of retail investors said for a long time that ROKU was the next Netflix. But you know what? They never looked at the Netflix chart. That's the problem. They said Alibaba was the next Amazon. They said NIO was the next Tesla. They said that ROKU was the next Netflix. But they never actually went and looked at those charts. Netflix made people feel like idiots. Netflix has done worse than this twice. Netflix has made you feel like a fool. Twice. At minimum. Netflix is still making people feel like idiots, right? but this is a wave 1 and a wave 2. If we're above 125, that's a little tight, but I think the length of wave 1 places wave 2 low, says a minimum target in the future is 600 before a shallow wave 4 and a wave 5 higher. So I'm in growth for a long time, not a good time. If we look at Zoom, very similar idea where it's getting deep. But wait a minute, didn't people think Zoom was the next Google, right? Zoom, we didn't even know what the word metaverse was, a couple months ago, right? So what we could see is a few possibilities. One, what if we have another, what if we have more lockdowns, right? Then Zoom would be a pretty cool stock to have. But I think even if we just kind of have the metaverse thing play out, or we don't know, right? We don't know what could be happening to Zoom. What we do kind of quote unquote know is that this is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2. Let's just say they're getting the margin traders out of Zoom, right? Realistically, anyone who's on margin probably should be out of Zoom at this point. But what I can see, this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So Zoom is another example of stocks that I take smaller position sizes with. Tight would be 107, this wave 1 high. We hold above that level. Zoom ends a wave 1, wave 2, starts reversing literally into the metaverse. It's going into the 590 would be a minimum wave 3 target. We'd have a shallow wave 4 before a wave higher. So I have been talking about Zoom for a while, but I've always kind of talked about a lot of these growth names as long-term ideas, especially the clean energy stocks. I've always liked them for the long haul because they're going to make people feel stupid. And I think when you look at Zoom, it's like there is a Google analog. When you look at Roku, there is a Netflix analog. When you look at PayPal and Square Cash, there may be an Amazon or a MasterCard analog. The problem is no one's really actually looked at those charts. No one's ever like, oh, wait a minute. Google made you feel a lot dumber than this in 2001, I think. At least, a lot of the big tech stocks did. So Zoom, Roku, they might have big tech in the 2009 analogs, but big tech in 2009, that was not a time when people were very bullish that sector. We look at TWLO. TWLO is a cloud computing stock. One interesting tidbit about TWLO, maybe a little theme that we've seen, we had IBM go up recently and we had Microsoft go up recently. I'm not trying to look at, the stars or anything like that. But what we could see is that both of the reasons that they said IBM and Microsoft went up were because of cloud computing. So that was just something interesting that both times they really made the cloud computing idea a big level. I think they're trying to get that in our head. Hey, why don't you go look at those cloud computing stocks? I think this is a wave 1 and an ABC wave 2 between the 61.8 and 78.6% BIM. So TWLO has a clear level above 151. That's wave 1. That's wave 2. The length of wave 1 places wave 2 low. Says TWLO could be the next cloud computing name to do very well. I think it could go to 560 for a wave 3 before a shallow wave 4 and a wave 5 higher. So TWLO, nice name in the software sector. If it's above 151, I think at minimum, it has many more highs above 457. That'd be a minimum expectation for a wave 3. Realistically, a wave 3 would go into the 560s before a shallow wave 4 and a wave 5 higher. Another example of, the risk is right there. It's 151. The reward, that's kind of when we start to have to use our imaginations a little bit. Here's Cloudflare. Cloudflare was a leader in the growth sector. I think that kind of one of the misnomers that we have that we'll always talk about was that 2021 was a horrible year for growth, right? All growth investors in 2021 got scammed, right? Everyone's a bag holder. But if we look at Cloudflare, if we look at Unity Software, if we look at Tesla, maybe some other names like Datadog and Zscaler, it's like, wait a minute. There's a long list of names that went and broke that first quarter high from 2021. And what we've really done with basically every single growth stock is we've looked at the first quarter high from 2021 and we've asked, is that going to get broken? And I think what we've seen is a couple names like Unity Software, a couple names like Cloudflare, like Tesla, they've exploded above that high. What I believe is happening is they are acting as leading indicators that a lot of other names in this sector are going to do well. For Cloudflare right now, I think this is a 5 waves impulse, and I think this is an ABC correction. So this deep correction most likely is a wave 1 and a wave 2, ending between the 61.8 and 78.6% fib. interesting tidbit is that on the weekly chart, Cloudflare makes a new high on the RSI. So that suggests from an Elliott wave perspective that this is not a massive wave 5 in progress. This is all a huge wave 1. This is a wave 2 ending between the 61.8 and 78.6% fib. So let me explain the rule. There's a rule in Elliott wave theory that says a wave 5 must end with momentum divergence. So if on the weekly RSI, if on the monthly RSI, if on the daily RSI, the candle that makes a new high, the candle that ends an impulsive structure also ends with a new high on the relative strength index, that gives evidence from an Elliott wave perspective that a wave 5 has not ended. All that really means is that we should see another high. Now, can I tell my broker that Cloudflare made a new high on the RSI? I can't, okay? It's just another clue, just another statistic that can be really helpful, and we've used that a lot throughout the course of this channel. If we're above 58, which is a little wide, I think Cloudflare is really best used for evidence that we had leaders in the software sector. Now, the next time that Cloudflare and Unity software, and Tesla rally, they could bring some laggards in the growth sector like clean energy and software with it. Here is Fastly. Fastly's gotten very close to 25. It's actually at 25. So they've made Fastly very difficult. I'm going to continue to hold growth, continue to hold e-commerce stocks. Like I always say, they're going to make you feel like an idiot. And by you, I mean me. They're going to make me feel like an idiot holding growth stocks, okay? Growth stocks have extremely high betas. Okay, there is not one stock besides Credit Suisse in the value sector that I bought and it ended the year lower than when I bought it, okay? In fact, there wasn't really even a value stock that I bought in 2021 where we even got close to a 10% or a 15% stop level. Value stocks have very low betas. They're kind of a lot easier to, say, hey, this is, where we're not going to go 10% deeper. This is where we're not going to go 15% deeper. For growth stocks, the beta is extremely high because the reward is extremely high, okay? My price target for Pfizer was 60, right? That got hit. That was a 55% gain, okay? XPEV was a 55% gain. It's not even close to my long-term expected price target. So value stocks, they need bigger position sizes. Growth stocks don't. Growth stocks can get a lot of exposure for a little bit of money. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. We're at the 78.6% fib. We don't really have a low to trade against below 10, but I think this is a wave 1. I think this is a wave 2. So there are other ETFs like ARK, like ARKW that may help supplement Fastly. I think the TWLO chart could be very important, but it's all kind of pointing to the same thing. This is capitulation. This is, they're going to find out who really wants to be a growth investor. A lot of people say they want to be growth investors, but then it's time, then you get called a bag holder, right? Then people start tweeting in all caps. Now, all of a sudden, being a growth investor isn't very fun. I think what's going to happen, though, that's wave 1. We're going to end wave 2. The most conservative thing to do from an Elliott wave perspective is wait for a wave 1 to form before a wave 2 to buy against with a stop at this wave 2 low. So the most conservative thing for Fastly would be to wait for a wave 1, buy the wave 2 against the larger degree wave 2 low, and then look for a wave 3 impulse. So that would be the safer way to play it. For me, Fastly is just one that I'm interested in holding for a long time. Very similar to how I view Alibaba, very similar to how I view a lot of these growth names. They're going to make me feel like an idiot, but it's going to be worth it. If we look at the IPO ETF, I really like this chart. This is a huge wave 1 and a wave 2. I believe this is another wave 1 and an ABC correction wave 2. We're at the 61.8% fib. Above the 78.6% fib, which is a little wide of 32, this is an ABC correction for an ETF full of IPO stocks. We started this video talking about XPEV and Lee. We're going to end this video talking about Palantir and Unity. But the idea is there that we're going to see XPEV, we're going to see Lee, we're going to possibly see Unity software, maybe some other software names that were maybe leaders a little bit in 2021. They're going to go break those IPO highs, and the entire IPO sector can turn around. This holds a lot of Palantir. It holds a lot of Lucid Motors. I think this is a wave 1 and an ABC wave 2. The length of wave 1 placed with wave 2 low says we can end a wave 2 at the 61.8% retracement, and an entire ETF full of IPO stocks can double from the current levels, go to 98 before shallow wave 4 and a wave 5 higher. So there's a lot at stake, and the risk right now can be defined. If we look at Unity software, I think it's very similar to Cloudflare, very similar to Tesla, where we have this narrative that growth was all doom and gloom. I think what the market is going to do is going to reward people who recognize that Unity software is a leading indicator, that Tesla is a leading indicator, and that Cloudflare and Zscaler and Datadog are leading indicators that many growth names are going to go break that first quarter high from 2021. I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So this could be similar to other names where waiting for a wave 1 and a wave 2 to form would be best because we are at the 78.6% fib. I wanted to include Unity software because it's very similar to Cloudflare. It went and it exploded above this wave 1 high. Now it's in an extremely important wave 2 correction. The next time that it rallies, the next time that Tesla rallies, the next time that Cloudflare and Datadog rally, they could take laggards in the software sector, in the EV sector with it. So wanted to show Unity, the widest level right now would be 76. We are at almost to the dollar, the 78.6% fib. So this is where wave 2 can end before a pretty explosive wave 3 high. Let's talk about Pounder. Let's talk about Nano-Dimension. This is the clearest that we've had levels on Pounder for a while. So here it is. This is really the risk with recent IPO stocks, right? The higher the risk, the higher the reward. A lot of times, it's not always perfect like that. With options, it can be a little different where you can lower the risk. But anyway, if we look at Pounder right now, the levels have never been clearer. If we're above 8.90, this is a wave 1 and a wave 2. If we're below 8.90, then that's not the case. This was not a wave 1. That was not a wave 2. Could I still see, a shakeout and a selling climax? Sure. This is why I just managed to risk up front. I buy and hold stocks. I'll be honest. I bought Lordstown Motors, I think at like 18, and I just kept holding it. So I'm still holding Lordstown Motors. I took a much smaller position size, but in the process of buying Lordstown Motors, I was able to get exposure to a lot of clean energy stocks that actually did do well, like First Solar, like Enphase Energy, like Xpeng, like Lee. So Lordstown Motors was the loser. I bought it. It was in a kind of similar situation where this was a wave 1 and a wave 2 against a very recent IPO. So really the risk with trading recent IPO stocks is that you don't have that much chart history. That's kind of the only issue. I would call that the Ebon risk. I would call that the Lordstown Motors risk. Right now for Pounder, if we're above 8.90, that's a wave 1, that's a wave 2. Wave 3 goes to 45. Below 8.90, I don't think it would be the end of the world, but it would invalidate the idea that this is a wave 1 and a wave 2 that form. So with Pounder, I think the IPO chart will be extremely useful in any scenario. Whenever IPO ends a wave 2, whenever Unity software ends a wave 2, whenever most of the growth sector ends a wave 2, very likely Pounder will be with it. So above 8.90, this is wave 1 and wave 2. Below 8.90, it isn't. 45, if we're ever above it, would confirm this is an IPO base. Retail was right that Pounder was going to take over the world. They weren't right that it would be easy. So that's Pounder. I think we're above 8.90. It's got a lot of upside. It's got very clear levels. Here is Nano-Dimension. Really the only non-software stock I'll talk about in this video. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. Very similar to what I shared with Workhorse and with Akamoto. It's a small cap name. Realistically, the only way that I could manage risk with this is upfront with position sizing, but I think this is a wave 1 and a wave 2. It sounds crazy, it sounds ridiculous, but this is what can happen with high beta growth stocks. They can make significantly higher returns than anything that could ever be seen in the value sector, right? I'll never in my life talk about a value stock that could go 600% higher, 700% higher, right? That's unthinkable, right? At the end of Boeing's life cycle, I could maybe see it going 400, 500% higher than current levels. I could see Nano-Dimension going 500, 600% higher in a conservative wave count. To be honest, that's a wave 1, that's a wave 2. There's no real way to manage risk besides position sizing, but if we're above 1.31, the minimum wave 3 target is 21, 28. And I think a lot of people, let's say Workhorse, Akamoto, Nano-Dimension, right? Those are silly stocks. So why on earth would we talk about? They have massively higher betas. So if I'm someone who's looking to get exposure to the growth sector, and I'm worried that there's a lot of risk involved, I can personally take smaller position sizes and get a lot of exposure with high beta names like Workhorse, like Akamoto, like Nano-Dimension. So I just wanted to share, I still think that's wave 1, that's wave 2. wave 3 at minimum, if Nano-Dimension ever gets going, takes it to 20. For what sounds crazy, but would be a minimum wave 3 target before shallow wave 4 and a wave 5 higher. It's everywhere. It's everywhere. Retail was right that Nano-Dimension and Roku and Zoom and PayPal and Square Cash and Neo and XYZ growth stock was going to take over the world. They were wrong that it was going to be easy to hold. They were right that Roku was the next Netflix. They were right that, you know, maybe some of these e-cash stocks are the next MasterCard or the next Amazon. They were wrong that they'd be easy to hold. They never looked at that Amazon chart from 2008. Oh, wow, they made Amazon difficult, right? If I can't be called a bag holder, you know, with Roku, I wouldn't have standed a chance buying Amazon in 2008, 2009. I think this is a wave 1 and a wave 2. It has a high beta, but above 1.31. Nano-Dimension can go to 2028 before shallow wave 4 and a wave 5 higher. So I look at, you know, a lot of growth stocks with much larger time horizons. Here is Bitcoin. I mean, Bitcoin kind of shows what can happen and why volatility is the price that investors pay for upside potential. This is up 300, 400% from levels that I've been tweeting about Bitcoin in all caps. And what happened right before this explosion? A kick out, right? They made everyone feel like a bag holder. If you look at any chart that's gone on a significant rally, they made retail feel like idiots, right? So if getting called a bag holder on the internet is someone's biggest fear, then they need to stick to value, right? They need to stick to low beta stocks because growth, right? You're going to get called a bag holder. This is a wave 1 and a wave 2. If Bitcoin is above 28K, the minimum silly wave 3 target would be 73,000 before shallow wave 4 and a wave 5 higher. The minimum expectation for wave 4 is that it retests the wave 1 high. Wave 5 is at least the length of wave 1, places the wave 4 low. So it's another growth stock. It's another growth name where we have clear risk, right? If we're above 28K, that's the risk. The reward is, man, maybe Bitcoin is what some of those maxis keep saying it is. So we'll see. We'll see. I love that Bitcoin has a reason that it's down. Whenever there's a reason why that every retail trader knows, that's a good thing, in my opinion. I like that there's a reason that the stock market's down, right? Everyone knows why the stock market's going to crash. I love that. If we look at Ethereum, they're probably going to be giving us new reasons for crypto. 1, 2, 3, 4, 5. Wave 1, ABC. Wave 2 at the 78.6% fib. Very similar to Bitcoin. We have clear levels. If we're above 17K, the length of wave 1, place of the wave 2 low, says 5.3K is a minimum wave 3 target. We'd have a shallow wave 4 before a wave 5 higher. If wave 4 retests the wave 1 high, the length of wave 1, place of the wave 4 low, can take Ethereum to 8,000. So that's a long ways away. If we're above 17K, then it could be closer than we think because wave 3 is stronger and faster than the length of wave 1, place of the wave 2 low. I don't think that for either Bitcoin or Ethereum, breaking this low would be the end of the world, but it would be a very important level, at least for the medium term. And it would show that a wave 1 and a wave 2 didn't form from the June low of 2021. Here's Hut Mining. I want to share kind of a further kind of view of maybe a wider level for crypto. I think this is a wave 1 and an ABC wave 2. This is a 1, 2, 3, 4, 5. Another wave 1 and an ABC wave 2. I think what could happen to Hut Mining is that we hold above 3.15, which is a little tight, but it wasn't too far away from this low. From today, from this week, we got to 4.52. I think if Hut Mining is above 3.15, this is a wave 1, this is a wave 2, it's going to head back to the lower bound of this pitchfork. It's going to go make a new high and break above 17. It could be very good for crypto. If this is a wave 1 and that's a wave 2, the length of wave 1, place of the wave 2 low, could take Hut to 17 before a shallow wave 4 and a wave 5 higher. Realistically, this wave 3 would go all the way to the median of this Andrews pitchfork. Most likely, a lot of cryptocurrencies would be doing very well during that time.